years as a mortgage professional to help people improve their credit. And Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Let's get started.
I just made it.
I'm telling you, man, talking about slipping in right at the end.
I felt like Indiana Jones. I had to grab my hat when the stone was closing.
Well, good to see you, man. What's been going on?
What hasn't been? We went on a 23-state tour.
Wow.
I guess you would call it. My son had an invite to Berkeley to do a summer camp up there for percussion. So we figured why not drive and give it the old Clark Griswold try. So we took off and we've been on the road for the last 2 weeks. We just got back in on Sunday. So we were able to see 23 states in total. I tell you what, Mike, from the bottom of my heart, driving around and seeing things, and you just get to appreciate life and appreciate what you have, and I just want to say I really appreciate you. Thank you for what you do.
Well, good. I appreciate you too, and missed you dearly. Tim was able to show up last week. It was definitely because I didn't do 23 states. I did Louisiana, Mississippi, Alabama, and Florida there and back. And then we had a flat on the way back, but that's a whole different story.
Oh, wow.
But anyway, it was a great trip. For me, I'm not much of a beach guy, but I got to spend a little bit of time with the grandkids out at the beach and hanging out and just a different environment. It was a lot of fun. And,
I saw your hat. I like that little that beach hat that you had.
Oh man, I need to cover as much of my body up with anything, with the t-shirts, hats, or whatever. It's ugly. But anyway, well, Tim kind of filled in for you last week. He kind of surprised me, and I was all ready to get started. But anyway, it's all good. And you know what? I should go on vacation more often because I was super busy, and it was like you leave and people just pop out of the woodwork. It was crazy.
Tell me about it. I've always been a firm believer that you need a vacation when you get back from vacation. So
that's exactly right. So anyway, I've got a little bit prepared. We're going to do it a little different today. We kind of experimented with this last week, but the title of this is Understanding the Home Buying Process in June 2023, which is fleeting fast. But you've got to keep me on track because understanding the home buying process in June 2023, my data may not sync exactly with that. And so it's your job to keep me under control today. All right?
We'll do. I'll try.
So this is kind of what we're going to talk about. This is the 14th consecutive month of negative home sales. And all that means is that, and it's not a revelation to anybody, that home sales compared to last year are way off. Matter of fact, they're way off from the last 2 years. We're going to talk about the highs and lows of the 2023 housing market. There's really some kind of confusing information out there. And I need you to help me straighten out what that is and kind of make sense.
Okay, I'll try.
There are 2 lawsuits that might change home buying. When you hear this, you'll freak out. I did. It's ridiculous. But it's a world we live in, I guess. I don't know if you've seen it, but homeowners insurance, there's a big crunch on that. Have you heard anything about that?
Mm-mm.
Oh my gosh. Homeowners insurance rates are way up. And anyway, that's affecting not only our interest rates up, but anyway, this homeowners insurance thing is bizarre. And then we're going to talk about the $4,000 grant program that I like to talk about and anything else you want to bring up. How's that?
I'm good with that.
All right. So let's see if I can get this out of the way and skip on to the next one. So reports came out May 2023, another month of decline. Now this is real simple. I mean, we all know this. Single family home sales down 10.4% year over year. And that actually surprises me. In 2022 was a gangbuster at the first part of the year, and we're only down 10.4%. I would have figured it would have been more like 50% or something. So, I mean, it's been way down for me and way off for my business. Compared to 2019 now, we're just down 1.3%. So in 2020, towards the end of 2020 and the full 2021, it was rock and roll. And including the first half of 2022, it was rock and roll. So that's what we're comparing to. So maybe this is what it's like to be normal, but I just don't see it as normal though. I think that this business, the fact that we're 1.3 off what we were doing in 2019 surprised me. Average price dipped 1.6% to 431, and that's a little quirky. The median price fell 3.1% to $340,000. Now the indication is that prices would be less than they were last year, when other things that we're seeing are showing that there's been appreciation this year.
A little bit.
So I don't know how the average price dipped. One, they're averaging over a lot less units in volume than they did before. The median price is pretty easy though, because what they have is they have the lower priced homes and the more expensive priced homes. There probably have been a lot less of the more expensive homes selling compared to the number of less expensive homes that are selling. And when you do a median price, you just go right in the middle and chop it right there. And as opposed to the difference between the average price is you add them all up together and just divide it by the number of units that you have. So that makes more sense to me. But anyway, I've seen multiple offers on a lot of properties. And I've seen, anyway, some of the stuff that came out in the news today was just quirky. Inventory, though, has climbed from 1.5 months to 2.8 months. And that's a good thing for home buyers anyway. Townhomes and condos sales fell for the 12th month in a row, down 26.1% year over year. So those are kind of the topics we're going to discuss. And let's just see what's got on the plate here. All right, highs and lows of the 2023 housing market. So the reason that is blank is because we're going to talk about that, just you and I. And if I can get this out. Yep. There we go. Almost. There we go. So tell me what the highs and lows of 2023 are. What do you think?
It's more of a buyer's market is one of the highs. Buyers have more choice. There's not so much competition on houses. Obviously, the lows, in my opinion, it's a little bit more challenging for comps on the listing side, which I love the listing side. So that's a challenge. And then also, obviously the interest rates being as high as they are, they're pricing some clients out of the market. Business is down about 20 to 30%, is what I'm seeing overall. In some pockets of the area, it's still a high demand market, especially around the Woodlands area. We're still seeing a high demand, so that's a good thing. People are still moving to Texas. What about you? What do you see?
Well, I like the idea that the highs to me is that the consumers, the first-time home buyers, the people that are buying homes are there's more inventory, seems to be a little bit more. It's not a lot, but according to the report, it says it's more. And the fact that they have the options. I've got one customer that's on their fourth house, and they are very discerning. And I think they may be a little over their expectations on the quality of the house or the inspection process. So, I think that the sellers were willing to work with these people in some cases, but they were just pretty adamant about, it had to be this way or no way. So that's kind of interesting, but I guess that's the kind of indication of a buyer's market, I guess. If they feel like they have enough choices that they can go out and find another house that's better.
Well, what also I'm seeing, Mike, and we've talked about this in previous shows, I do the training for the brokerage. So part of the training process is review of the offer or whatever paperwork prior to signatures. And I've been seeing a lot of seller contributions, right? A lot of home warranties on the front side. So buyer's market, it's not only the availability of the houses out there, a little bit more inventory, but it's also the ability to ask prior to inspections and get people to agree with it, right?
Yeah. So that is for sure a positive. And, I wish I could say that interest rates were coming down. I haven't seen it yet. Matter of fact, they've floated. Well, they've just been very stubborn. But the kind of in the same way that I said before, if that keeps anybody from buying a house, the people that do want to buy a house, that's a positive for it. Because what really scares me is that when interest rates go down, and I sincerely believe that they're going to go down, I just don't know when they're going to go down, that it's going to be the mad rush and a flood back into the market. There'll be inventory because the people that are loan locked will list their house. But I think that there's a pent up demand, and I think it's going to be a little crazy.
Oh, there for sure is a pent up demand. Another positive, or I guess a high point of 2023 would also be that new homes, the builders are offering incentives like paying closing costs, etc. So those are some positives as well.
Well, I've seen also that they're offering less and less now because they are so busy. I mean, that's one thing that resolves that issue of having to win a bid is you can go to a builder and buy a house that's not going to be ready. It may not even be, the foundation built at that point. So they're definitely players. This is a good market for them. Their optimism for builders and building is up. That helps to the inventory, but it's still 2.8%, and that counts properties that are currently pending, option pending, and so you have to take some of that out because there's not that many houses in there.
Yeah.
So I appreciate that. So I have this article, and this is in regards to the 2 lawsuits. You know what? I'm going to do this real quick. This is what Zillow said. I think this article came from Zillow. A recent real estate report from Zillow predicts a 5% growth in home values this year, which is contrary to what we just said. Housing inventory remains limited, which in turn continues to push property prices skyward and inflate home value appreciation. So homes are appreciating mainly because of the shortage of inventory. Along with the ascent in prices, the real estate market is witnessing a descent in sales volume. Zillow estimates peg the number of existing home sales at 4.2 million. That's nationwide. And that's about 4.2 million. The indicator is a sharp 17% dip from 2022. Historically speaking, May 2023 was a rather bleak month for home listings. So not too many people listing. Zillow's data records dating back to 2018 have never shown a May with such few active for sale listings. The shortage of homes paired with mere trickle of new listings entering the market has consequently led to a speedy appreciation in home values. The rapid surge marks the swiftest month-over-month increase in close to a year. So despite limited inventory, buyers remain undeterred, keen to purchase homes, but with dwindling choices and mounting prices, the scale of demand still outweighs supply. So maybe not as eloquent as you and I were, but that's pretty much the same. The next thing, have you heard anything about this lawsuit? I want you to.
Oh man, I've been unplugged for 2 years. By the way, anybody that's listening, and for you, Mike, if you've never been to Vermont, New Hampshire area, that is the most beautiful area I've ever. Now, again, we were there during the summer, and it wasn't negative 40 degrees Fahrenheit.
Yeah,
that's what the guy told me it gets down to in the winter. But some of the most beautiful country that I've ever seen in my life.
I've been up there. I've been both those places, and they're pretty very different from Texas.
Very different, very different, but beautiful.
Okay, so the article title is 2 lawsuits might change the way you buy homes.
Lay it on me.
2 current class action lawsuits could rock the foundation of real estate transactions. The plaintiffs in these cases claim the current method of compensating real estate agents is part of an effort to strip billions from home sellers every year. Both lawsuits, I won't give the names because it wouldn't make any sense anyway, accuse the National Association of Realtors and some of the biggest brokerages in the country of misusing multiple listing services to inflate fees and prop up agent commissions artificially. All right. So this is what they're saying. The lawsuits revolve around multiple listing services, local online databases where agents share detailed information and photos of homes for sale. They are necessarily part of the home selling process for most. More than 85% of sellers listed properties on the databases last year. The plaintiffs argue multiple listing services are being manipulated to unfairly keep agent commissions high. To list on one, you must agree to follow a complex, predetermined payment path from the property sale. The lawsuit says that this essentially leaves sellers no choice but to foot the bill for both buyer and seller agent commissions at closing. Almost 97% of MLS are controlled by the NAR. The lawsuits call for a system in which buyers would be responsible for directly paying their agents. Plaintiffs say this decoupling of commissions could level the playing field and pave the path for a fairer system. What do you think about that?
I can see where they're going, but at the end of the day, the sellers are hiring us and cooperating. The way the listing agency agreement reads is that they are also willing to pay a cooperating broker. The buyer's agent is the cooperating broker, and it's a negotiable term on the contract.
Sure.
So,
it's not required, right?
It's not required, and our fees are negotiable too. What I would say to a seller that is saying that is that you lose a certain amount of marketability on your house, pricing it where you want to price it versus other houses that are paying commission to both buyer and seller. Because now the buyer is going to incur that extra charge on top of the purchase price of their home, and they may or may not have the ability to do that, working it into the mortgage, which in the end, if you think about it theoretically, the buyer is paying the commission. It's not the seller. The buyer is the one that's taking out the loan and paying for the total price of the house. So price your house accordingly, and then also work with an agent that is able to market your house and get you the most money for your house in the best terms.
Well, so this is one of the things that comes to me is that the biggest reason that people don't buy a home is primarily the amount of money that they have to save to put down and pay closing costs.
Yep.
And if you add an additional 1, 2, or 3% to that, then you're going to lose buyers. You're going to lose a lot of buyers.
Oh no, you may still have buyers, but they're going to be unrepresented buyers. And those buyers, because the fiduciary duty for a buyer's agent is to the buyer, and for the listing agent is to the seller. If you have a listing agent and an unrepresented buyer, they have no advocate on their side. And if they're priced out of being able to have that advocate, they're going to be taken advantage of. And so in my opinion, that's the best way that I can explain it, is that it is in the buyer's interest and the seller's interest to have everybody represented by a professional realtor who has the knowledge and the experience and has the access to the paperwork and has access to the information to give them to make informed decisions. And that's the way I look at my job.
Yeah, there are trains. They say it's a ton of money and it doesn't look like it's good for buyers. And who knows what's going to happen. This will be one that we'll wait to see about what happens with that.
And I actually heard about that one a couple months ago.
Did you? Yeah, I guess it's not. Well, the article came out June 27th, as a matter of fact. But that's just the news cycle that we're on today. The other thing I just wanted to bring up, and we'll talk about this real briefly, is that the homeowners insurance crunch. I sat down and had lunch with a guy, one of my friends from Allstate, the other day, and I was asking him, I said, Steve, why are prices on the homeowners insurance policies right now so high? I mean, I've got a person now, granted, down in the Pearland area, there's wind hail problems down there. They have a lot of water issues. They're close to the coast. and stuff. And insurance is just more expensive down there because the losses are higher. But to pay $6,000 a year for a homeowner's insurance is crazy. And I've seen where we used to say that you'd pay $2, $3, maybe $4,000 tops on a top end property. Now you're paying $6, $8, and $10,000 a year for homeowners insurance. So this is what the article talks about. It says homeowners insurance is becoming pricier and tougher to obtain in certain areas of the U.S. Perfect example is down in Pasadena. I had trouble getting insurance for that property down there. The forces driving these changes include climate change, which is a bunch of crap. Sorry. Erase that. Climbing cost of home repairs and rebuilding and rising premiums from reinsurance entities. The insurance industry cites a 55% surge in rebuilding and replacement costs from 2019 to 2022, contributing to the overall inflation of homeowners insurance. Reinsurance firms, which assist in the trend, is particularly pronounced in areas of high risk for natural disasters, particularly mentioned Florida and California. Following record high expenses incurred by Hurricane Ian, Florida has seen many major insurance companies withdraw from its market, and in California, the increasing threat of wildfires led national insurance agents, or giants, State Farm and Allstate, to cease providing residents with new insurance coverage. This is going to be a problem. So when you have interest rates that are higher than they've been, you've got the price of homes going up, which increases the taxes that go up.
Yeah.
And then you put homeowners insurance on top of that. It's getting to be harder and harder to buy a home.
It's like lighting money on fire.
That's right. And these are kind of non-inflationary things. I don't know if you heard there's a guy in town. He actually ran for one of the political jobs. Name's Eric Dick. He's an attorney in town, and his main job, the way he advertised on the radio, is that he goes after those greedy insurance companies. And if you go and make a claim at an insurance company, they will fight you to get that money in most cases. Now, not all of them do that, but some of them do, and some of them rightfully so, some of them wrongfully so. I think of one of my own specific experiences, but I'm not going to give that in there. But I got to tell you, it makes it just harder to buy a home when you've got all these things kind of laying on top of each other. Yeah. So that's all I'm saying about it, Joe. There's some stuff going on out there, and you just never know what's going to happen. So.
Yeah. My homeowner's insurance went up this year, but my house it's built in 1968.
Yeah, well, that's it. We have older homes, and you know what? That's it. They're more likely to have issues, and they're trying to guard against that. So I did find in the reading the 5 reasons to buy now, and that's one of the things that I think is valid because I think it could be worse later. Inventory is up, more homes for sale, rates are poised to decline. They haven't yet. Medium home prices are down. That is an indication that they're holding steady is really what I think is more like it. Homes are on the market longer, just like you said earlier, that there's negotiations for closing costs and the things, the repairs and things that they are talking about. And then the bottom line is family things, marriage, babies, new jobs, all those things. Sometimes you just have to move.
Yeah.
The interesting thing on this particular slide is in November, they looked at a poll and they said, how many people think that home prices are going to increase in value? Well, 98% of the people that were polled said that, or 96, I'm sorry, said that the home prices would be down substantially in 23. And in March of 23, they asked them again, and 92% said they're actually going to be up. So you just
I think that lends to the people that are loan locked, right?
That's right. That's exactly.
They're not going to be selling their homes.
So you need to be thinking. You don't want to sit around. So this one, consumers facing headwinds in home search. So this blank slide here is a signal for me to make an adjustment to this and put it out of here. What are the headwinds that people are facing right now?
Well, I can't say that it's nationwide. it probably differs in every area, but just availability of homes, especially in the $200,000 to $400,000 price range. There's still tons of competition, even at the higher interest rates, even at the buyer's market, and the availability of those homes is just if they're listed and if they're in good condition and they're priced reasonable, they're going to sell.
We're going to say that again. If the condition of the home is move-in ready, is the term I like to use.
Yep.
If it's been prepared for sale, somebody took the time to take care of all the little nuances. They were smart enough to get a home inspector to go out there and pre-inspect that house. When they put that for sale sign out there are people in line waiting to buy that house. And that's probably more in the 200 plus range, maybe a little less when you get over 400, but not too many less, to be honest with you. I mean, what you saw with the average price is $431,000 in the United States. So those are big factors. I think the headwinds are the things that we just mentioned too, is the fact that it's getting more expensive every time you turn around. If it's not insurance, or interest rates, or just all the things that are out there, credit's harder to get right now. The banks are struggling, and the banks are a little more discerning today than they were before for making loans. They've changed the guidelines. I mean, the FHA used to be, you could have a 580 FICO and a 55% debt ratio. You'd get a loan. That doesn't happen today. So anyway, there are headwinds out there, and I don't think they're going to get any better before they're going to get worse before they get better. That's what I think. All right, so we're going to talk a little bit about this grant program that I'm a big fan of. I'm an advocate of it. I think it's one of the better ones out there. As a matter of fact, I've got a gal that's not even a first-time home buyer. She is she just sold a home, as a matter of fact, and she's qualified to get this $4,000 credit towards her down payment just because of the income that she's working in the home that she's buying.
That's cool.
So it's https freddie.com, sf.freddie.com. You can see it up there. 80% of the median income in Harris, Montgomery, Brazoria, Fort Bend, almost all the counties in and around Houston. The new medium income, new medium income is higher than this, but this is 80%. That's what you're going to have to qualify, is just over $72,000 a year. And what's crazy about this program is they will work with you to make it happen. So an example, let's say that the guy makes $72,000 as his base, and he makes commission, and let's say he makes another $2,000 a month in commission. They don't have to count the commission. Or the same thing would happen is if you had overtime. And so they will allow you to not count overtime. Or let's say that you have a spouse that works. You don't have to use your spouse's income. So they're very flexible about making this program work. And gosh, $4,000 extra money, that goes a pretty good ways towards either a down payment or paying closing costs.
Is that income value, Mike, is that gross or net?
Gross.
Gross, okay.
Gross, yeah. We use gross in just about everything. A lot of people don't understand that. We use the gross income, so before taxes are taken out.
Okay.
And if you'd like to find any more about that, you can call Joe Salas, and he'll say, call Mike.
Yeah, exactly. What are you doing? I would tell you call Mike.
Here's some more details of this program. It's home buyer education required. Yes, it is. 620 minimum FICO score, and I will be just totally transparent about this. Lower FICOs have trouble qualifying for this one. They're very picky on it. There is mortgage insurance to charge because you're basically putting 1% down or a little more than 1%. Debt ratio must meet the Freddie Mac standards. Income is interesting and flexible, which I just described. Salary commission, you can use only just salary. Married, not required to use spouse. Non-occupant co-borrowers are allowed. Aid from lender is capped at the $4,000 in this particular case. What is needed to pre-qualify? Well, hopefully there are those of you out there, and I'm getting calls every day, Joe, honestly. And I'll explain that to you later. Reasonable credit score is showing you handle your accounts responsibly. It's easy for me to say. $580 for FHA, $620 for conventional, proof of consistent stable income for the last 2 years, proof of enough assets to cover either the down payment or the closing cost. And in many cases, we can get the seller to pay. And I think I mentioned this to you a couple of weeks ago. When people come to me and they say, look, I've got $7,000 or I got $9,000 or whatever, I'm saying, okay, well, when you talk to your realtor, tell them that you want to look at houses that have been on the market for about 2 weeks.
Yeah.
Because the ones, if you try to make offers on those homes and you need to have closing costs, it ain't going to happen.
Yeah.
So I think that's a tip for some of these guys. Qualifying income, verifiable W-2s or 1099 or tax returns, 2-year job history, no big gaps in employment. New jobs are okay. College is considered work history. Actually, high school is considered work history.
Wow.
Overtime income considered after 2 years. Commissions considered after 2 years. I had a borrower come and she got mad at me. Husband had gone from a job where he was working as I think he had a base of $6,000, $7,000, $8,000, and he went to work when he came here as he was working in a car dealership, and he was getting a base, so he was a pretty smart guy, but he was also making commission.
Yeah.
And I told her, I said, well, when he makes commission, did he make commission in his previous gig? No, he was just paid salary. And I'm saying, well, I mean, they're not going to count that. And it's one of those deals where you have to have at least a year of making commissions in your job, and then they want to see that your previous job had that also.
Yeah.
It happens, but boy, it's a fight, and they want to see stable income for at least 2 years. So we're going to end her up with the rates today's mortgage rates. I pulled this up right off of a thing that I'm offering. 30-year 6.92 today. Ouch. 15-year 6.32, jumbo 6.75, 5/1 ARM 6.89, FHA 6.63, and a 30-year VA 6.65. Those aren't pretty.
No.
So if you are watching this, and we thank you for that, and you would like to get an update on what's going on in the mortgage rate market, all you have to do is call me or email me, and I think that my information is down there. Just get in touch with me. There's plenty of ways to do that. I will put you on a list that gets a mortgage rate, kind of like a data sheet, once a week. And I've had some people that like that, particularly if you're in the throes of looking for homes. This is a good time to do that. Joe, what do you got to finish for us?
It's been a pleasure as always, man. I'm glad to be back in town. Definitely need a vacation from the vacation. But I'm glad to be here, man, and I appreciate you. You know, I really enjoy this opportunity to speak with you weekly, and I hope out in the internet sphere, people find these and find them helpful. That's what
I do too. I do too. I'm trying to promote them a little more too. But listen, hey, if you're watching this and you liked what you heard, please subscribe and make a comment. Let us know what you'd like to hear. That'd be great to know. And in the meantime, we'll see you next week. Joe, have a great week. I'll talk to you later, bud.
All right, man. Bye.
All right, bye.